What's going on, guys? It's Expo Jesse. Today we're going to be talking about how to use Fibonacci's, how I use them, and how they can be used in your trading. Okay, so Fibonacci analysis was first discovered by Leonardo Pisano. I hope I'm saying that right. Also known as Fibonacci. He discovered a sequence of numbers that now are named after him. The Fibonacci sequence is what it's called, and it is a sequence of numbers that progress like so: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and so on and so forth. So you can go on forever. How you do that is the number that comes after is found by adding the 2 before it. So, for example, here we're at 1, 1. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8, etc., etc. Fibonacci's are found everywhere in life. Growth rings on trees, architecture, for example, like the peak of a building, buildings themselves, and plants. Pretty interesting. So what? How does this affect trading? So not only is the sequence interesting, but also the relationship that the numbers have with each other. For example, if you find the ratio between each number in the Fibonacci sequence, you will notice that it is 1.618 times larger than the previous number in that sequence. For example, we went through that sequence. If we recalculate or calculate 89 divided by 55, we'll get 1.618. Fibonacci is an example of the natural ebb and flow that we experience in life. And knowing this, we can also find the same sequences in trading and find its natural ebb and flow. So Fibonacci sequences, this is for the retracement. So we'll go through all these, and then the next page we'll say how to find them for extensions too. So the 61.8. I know that a lot of people have used Fibonacci's, but I actually didn't know this until I looked up how it was found. I just kind of took the, find the 50 to 61.8. That's the golden zone. Let's look at it. But it's very interesting how it's created. So 61.8 is found by dividing one number by the number that follows it in the sequence. So for example, 55 divided by 89. 38.2 is found by dividing the one number by the number that is 2 sequences away from it. So 34 divided by 89. 23.6 is the same thing, but 3 sequences away from it. So 21 divided by 89. 50% is not actually found by the difference between 0 and 100. It's actually from 61.8 and 38.2. 76.4% is found by finding the differences between 38.2 and 23.6, which is 14.6, and adding it to 61.8. 100% is found, for the sake of finding them in retracements, it's found by finding out where the trend starts, and the 0% is found by finding where the trend ends. The golden zone is found between the 50% and the 61.8. Many traders deem this to be the most optimal trade entry for a trend-based trend. But a 23.6 or a 38.2% retracement is still very valid for a strong trend, but most traders would prefer to wait in and get in at a discount. So here's an example of a Fibonacci. As you can see up here, I have the start of the trend. Down here, it's actually to this candle wick here. I just pull it to the right so that I can have more candles in the retracement. So start of the trend, bottom of the trend. The 0.5 is halfway between 38.2 and 61.8. And then you can see all the sequences here and how price reacts to each level. So here is Fibonacci sequences for extension. The 1.618 found by dividing one number by the one before it. 261.8 found by dividing one number by the one that's 2 before it. And then, as we can assume, 423.8 is found by dividing one number by the one that is 3 before it. So as we can see, these numbers repeat no matter how far into the sequence we go. And this is very important because when we look at trading a chart, we know that algorithms are mathematically driven, right? And so these numbers will inevitably show up in our trading or in a chart. So here's how I use Fibonacci's in trading. So like I said, you find the start of the trend, you find the end of the trend, and that's where you place your Fibonacci. So here's the start of a trend, a downtrend, and I kind of skipped some of these pullbacks and just went all the way down. All right, no, I didn't. I went back here. So I went from the start of the trend to the bottom of the trend, which is right here. I just drew my Fibonacci, pulled it to the right to get more candles in there. I mark out which Fibonacci sequences I would like to use, and then I wait for price to react to those levels. So it's very important. Some teachers would teach that Fibonacci's you just buy at the golden zone. For me, that's not really how I like to use them. I like to play a reversal out of a discount area. Not only that, but also seeing it bounce off of a Fibonacci. So here's we come down and then we retrace back to the golden zone. Remember, that's between the 50% and the 61.8. And then we have a reversal signal. Here's a 3-2 based on the strat. And then I have these price targets, the 23.6, the 50, and the 61.8. And those are my price targets to go to if I didn't have price targets based on price action. So if we're just going straight up right now, we're at all-time highs on ES and NQ. And if I were buying into all-time highs and entering based off of Fibonacci, these would kind of be my price targets, just based on that. I know that algorithms are mathematically driven, so this is probably where price is going to react. As we can see, it would have hit all three price targets in this example that was obviously cherry picked. So here's my Fibonacci setup very simply. So I have my 50 and 61.8 in yellow, so I know that it's the golden zone. Like I said, the 23.6 and 38.2 are still worthy of being on the chart, but they're not. If you're buying off of that, you have to know that you're not buying at a discount, and price could go further and retrace further. I have the 78.6 just for it to be on there, and in case it does reject that far. I don't really like to see price action go that deep into a retracement. Then I have the 1, and then I have the 0, 23.6, the 0.5, and 0.618. These are negative just because of how my Fibonacci retracement tool is. They're negative, and then I put them at green. Technically, the 0 retracement is a price target as well. So we'll go through some examples here. So here is a day we just went pretty far down. And remember, you want to, when you're drawing Fibonacci's, you want to kind of get away from the noise. So you could have drawn your fib from up here to right here, but it's not really the bottom of the trend. And down here is where I would say the bottom of the trend is. Then once we started curling up, then you can place your fib. Now, once we do that, we see that price came, tapped into the golden zone, and then after it taps into the golden zone, that's when you're on alert. That's when you're looking for entry based on your trading system. For me, that would have been this failed 2-2 reversal, and then would have been looking short. Could have also gotten in here, and your stop loss could be you could either go the 61.8 level and wait for a hold over that. You could do a fair value gap, or just however your trade system says to manage your stop losses. And then price targets are as follows. You have the 0 for a full retracement. You're probably looking at 2R or so for a full retracement. And then the next 3 are listed below. I think in this example, it only hit the 2. And for me, I've done some backtesting, a lot of backtesting on this, especially in my forex days. And I would trail TPs. So if I hit my first TP, I'd move my stop either to the 23.6 or 38.2. If I hit my second TP, then I'm moving my stop to the 0. If I hit my third TP, it's going back to this TP here, so on and so forth. So that way you're at least trailing profits. Here's a second example. I think we have 4 total. So here's an example of a deeper retrace. And also you can see here, it rejects off of a fair value gap. And so price starts here for the trend. That's where I start my fib. It ends down here. I just drew it to the right to catch more candles. And it goes up to the 61.8. And then there's a 3-2 reversal. And then goes all the way down to almost the second TP. Probably would have gotten stopped out here. But you have another entry here on a fair value gap and a 38.2 retracement rejection. So there's multiple entries in here, as you can see. Here's the third example. Here's a bullish example. So trend starts here, ends here. We retrace back to the golden zone. We have a failed 2. Here's a 2-2 reversal, probably entering there. Stop loss below this this failed 2, and then hits the first TP, and then barely misses the second TP. And here's the last example. So here's a little bit of a bigger trend. I just ignored this one to start, but this is an example of a shallow retrace. So trend starts here, ends here, comes to the 236 or the 23.6 technically, and then the trend is strong, because remember, a 23.6 and 38.2 is still very valid for a Fibonacci retracement. But we have to know that it's not at a discount. A discount is above the 50% level. So because of that, any entry here would probably need a wide stop, or it would need a wide stop or a very tight stop, whichever one. If you're okay getting stopped out and re-entering, then a tight stop's good. If you are not a fan of getting stopped out and re-entering, then you'd have to put your stops somewhere up here. And so that'd be a very wide stop, and you're probably only getting 1-to-1 R here. But if you did a tight stop, in this case, you would have gotten probably a 1-to-4 or so. So that's 4 examples of Fibonacci's, how I use them. Fibonacci's are a very, very important piece of the puzzle. And like I said, I don't just sell when it hits the 50% or the golden zone. I look for an entry here. Here's a good example as well. This would have, I've drawn so many fibs. I know that this trend from, let me go back, sorry. This trend from here to here, this is a 50% retrace at least. And then we have a 2-1-2 reversal, and then it would have hit all the TPs. And once you have enough practice under your belt, you're able to also see retracements and just guess and say, okay, that's probably a 50% retracement, and then start looking for an entry there. So Fibonacci's are everywhere in life. They're especially prevalent in trading, and a very important piece of the puzzle. So I hope you guys enjoyed. That is Teaching Tuesdays this week. Pretty short one, but don't need to go more in depth and make it more complicated than it has to be. So hope you guys enjoyed, and I'll see you next week.